Next guest has been thinking a lot about the lessons learned from this fight against inflation. Jeremy Cronic is Director of Monetary Policy and Financial Services Research at the C.D. Howe Institute. He joins us here in studio. It's nice to see you again, Jeremy. And we're going to be hearing from Tiff Macklem live in the next few minutes. But we are constantly reminded right now of these challenges that central banks and just about all of us are facing with inflation. What is your takeaway?
Well, I mean, as you said, the challenge continues, right? I mean, but we're making progress. I think that's quite clear. I mean, inflation's come down from a peak of just over 8%. We're now just over 4%. But as the governor intimated there, I mean, it's going to be a challenge to get it the rest of the way. And so that's really where we are in the fight. But I think Canada's in a pretty good spot, all things considered.
Yeah, so the balancing act of a fight against inflation with a potential fight to help the financial system if you see more of these risks. And, you know, days will go by and we'll feel like maybe things are getting better. But even today, we're seeing constant turmoil within the banking sector in the U.S. And we just saw that big deal with TD come to an end because of it. And obviously, the central banks have to play a key role in whatever happens on that front. So Macklem had to make those comments, too.
Right. And so that's the delicate balancing act here. So to fight inflation, you need to increase interest rates. But as you increase interest rates, you bring greater problems potentially into the system. I mean, certainly we're seeing that south of the border. But I think, again, that's where it's worth reflecting the fact that the Bank of Canada got going on its tightening earlier.
Yeah.
And that's allowed us to get inflation to be sort of, you know, on the track it needed to go in, unlike what we had to see in the Fed, where we're constantly having this discussion, should they increase more to fight inflation, even if it comes at the risk of further banking stresses.
Maybe we should clarify for the audience as well what the messages have been. To your point, Tiff Macklem and the Bank of Canada are already technically on hold after all the interest rate hikes. They've been that way for the last couple of meetings. The Fed yesterday didn't really tell us definitively that they are on hold. You know, some people think that basically that's going to be the case come the next meeting, but we're not quite there. Yeah. And even with the ECB today, while they raised rates by a lesser amount, they had to signal they're still in this fight against inflation. Is that what you're alluding to, just Canada versus the rest of the world?
That's exactly right. I mean, so the bank, like you said, has been on pause for the last couple of meetings, and the Fed hasn't been able to do the same thing. Now, they changed their language yesterday. To your point, they weren't sort of guaranteeing that they're going to be on pause, but I think the balance now is going to be that the data is going to have to show them that things are continuing to overheat for them to hike again. So I suspect they'll be on pause.
One of the big things that led to the Bank of Canada being on pause, aside from the fact that, to your point, they did get started relatively early, the housing market and the uncertainty there and the level of household debt that we have in this country. What's interesting at this point is just looking at the markets, there are some growing expectations that the Bank of Canada will cut rates by the end of this year. It looks like just based on the swaps market, there are bets that we'll see at the very least a 25 basis point cut by December. Now, again, there's a lot of central bank speak all the time. We know in the U.S. you hear that there are some expectations for rate cuts by the end of the year, but then the skeptics will sort of pour cold water on that becoming a reality. Do you think Canada is going to have to make a sooner decision on cutting rates than the U.S. will?
Well, I think they're likely to make a sooner decision. I'm not convinced it's going to be by the end of the year. So, I mean, right now...
in part because of the inflationary challenges?
Yeah, so exactly. So, I mean, you know, you have to keep the overnight rate above what we call the neutral rate, right? That's how you tighten things. But I think there's going to be a challenge, as the governor said, you know, getting it from 3 back to 2. And ultimately, 2% is the target. And so I think that it's going to, you know, it's going to take some time for that last little bit to get there.
For the Bank of Canada governor, and we're going to be monitoring some comments from him as we roll through the hour. Right now, there is this need to be ready to respond to the uncertainty, the banking turmoil. We talked about that. That's something we didn't quite know would be a storyline in 2023 coming into the year. As the governor was wrapping up 2022, he did make a point at the end of the year to just talk about some of the big takeaways from the last couple of years on the inflation front. And actually, you've written about this in a new piece too, like things like the changing nature of the supply chain. And it feels like it's gone beyond just, oh, we were coming out of the pandemic, we're getting back and going, and the supply chain needs some time to get back up and running. We're also dealing with some geopolitical realities that are changing the nature of the supply chain.
Yeah, so I mean, you know, it's been really more than 30 years since we've had an inflation fight like we're having today. And so I think there were lessons coming out of the pandemic. For example, you mentioned the supply chains. The supply chains are a key part of figuring out the output gap. And the output gap is a key part of the Bank of Canada's determination of what to do with its policy rate. And so the sort of uniqueness of this pandemic, of the shock, of the effects in supply chains, made it really hard to accurately estimate the output gap and therefore what to do with the overnight rate.
Jeremy,